I see fellow insurance people on. That's great. They can jump in and provide additional commentary as needed.
There's just a couple more people coming in. All right, well, we'll get started. Welcome, everyone. Welcome to another virtual presentation brought to you by the Boca Chamber. We are super excited to have our speaker here today. He is a great chamber member, longtime friend, and we're so happy he could be with us today. But before we go into our presentation, let's go through a little quick Zoom tutorial for all the newbies by Sophia. Sophia?
Hi everybody, welcome to another Chamber virtual event. Before we get started, I just wanted to mention that we will be recording this entire presentation and it'll be available on our YouTube playlist afterwards, and everyone will also receive the slides of this presentation in a follow-up email. We will be taking questions throughout the presentation, so please feel free to ask questions or comments. You can do so by clicking the chat icon at the bottom of your screen. If you click that, you can direct your message to me, to Connor, or just to everyone, or you can virtually raise your hand and we can unmute you and you can verbalize your question. Thank you.
Awesome, thanks, Sophia. So now it is my pleasure to introduce our cool, great friends, Connor. Connor Lynch was born and raised in Delray Beach, Florida. He attended his Bachelor of Business Administration from the University of Florida and then joined Plastics Insurance, a family insurance agency, along with his father and brother. Connor has over 18 years of experience in insurance and serves as the company's Chief Executive Officer as well as Sales Executive. Plastics has 4 offices and approximately 100 employees. He prides himself staying very engaged and involved in the community, as well as helping other organizations strengthen and grow. He is passionate about entrepreneurialism and education. He was humbled to receive the prestigious Next Excalibur Award this year from the Sun Sentinel. He has served on several city board and is past chair of Planning and Zoning Board for the city of Delray Beach. He has also been involved in many nonprofit organizations. He has served on the board of the Business Development Board of Palm Beach County and is the current chair of the Entrepreneurial Committee. He is currently on boards of the YMCA of South Palm Beach County, American Association of Adaptive Sport Programs, Extreme Teen Leaders, and also serves at the FAU Tech Runway Advisory Board. He has served as the chair of the Site Plan Review and Appearance Board in Delray, the past chair of the Delray Economic Leaders Political Action Committee, DELPAC, board member of the Delray Beach Chamber of Commerce, board member of the Dare to Be Great Foundation's Scholarship Program, as chair.
You don't have to read all that.
Well, I'm almost done. Because of the Melissa School of Art Foundation and as the vice president of Delray Creative Collaborative. Plastics was also awarded the Boca Chamber's 2019 Business of the Year Award. Connor's also been on our Pulse board before, and we're super excited to have you here. So Connor, let's go.
Awesome. Thank you, everybody. I appreciate you joining today, and hoping I can shed some light on the craziness going on right now in the world as it relates to insurance. I know there are a lot of unknowns, and as I said at the beginning, I noticed as you all were joining, there were 1 or 2 people that are also in the insurance industry. So I encourage you to jump in if you see anything that you can add or have questions about that might support the group. So as you saw originally, the presentation is about pandemic insurance, everything kind of happening right now in a somewhat uncharted territory. But if we could go to the next slide. I think the next slide was really the About Me and Plastridge, which Chastity just did a great job and thorough, so we can skip through that as well. We'll go to the next slide. So here we are ready to talk about insurance. I know that it's one of the most fun topics for people, and so today we'll try to keep it as lighthearted as possible as we go through this. But there is a lot of information to share on what's happening. And there are some things that are becoming determined and some that are unknown. So as you'll see from this next slide, the insurance market is, even prior to this, before, it's not necessarily before coronavirus, but I would say at least while coronavirus was really still in China only, the insurance market has been hardening quite a bit, probably over at least the last 12 months or more. And basically what has happened in the industry is there was a lot of private equity, venture capital that came into the reinsurance market. So just to give everybody a quick overview on how insurance works, typically the companies that you're used to dealing with, the Travelers, Chubb, even State Farm, Allstate, any companies you're typically used to hearing, they typically take in your premium and then use a percentage of that to turn around and buy their own reinsurance to kind of protect their own assets in case there's large issues. Now, what's happened is for a long time, the reinsurance market was very soft because there was a lot of additional money there because of the venture capital and private equity. However, since 2017, the industry has been seeing a crazy amounts of losses. This is the national chart here showing you 2017, 2018, and 2019. So just to put it in perspective, Hurricane Andrew, which was pretty catastrophic to the industry in 1992, was estimated to be a 23 or $24 billion hit. So just to put that in perspective, 2017 saw 53 billion in losses, 2018 186 billion, and 2019 150 billion. I include this because we're in Florida and we're kind of used to being the area where we're seeing the hits. We're the ones talking about the hurricanes. But as you can see from this chart, 2 hurricanes hit that didn't hit Florida. They hit the North Carolina, South Carolina area, and then actually one hit the Panhandle, and then in 2018, and then we have all these other things: the flooding, hurricane, tornado, tougher storms, the fires out in California. So if you go to the next slide, we'll give you a quick overview from taking it from national to kind of an international approach of what's been going on. So this is just talking about the time frame. This is this chart from 2019. Those are all of the catastrophes that would have hit the heavy radar of insurance. And as you can see, there's a lot of dots on that slide. So just giving you an idea, more than 300 billion losses, which is why venture capital and private equity started pulling out of the market. Private equity and venture capital kind of have a traditional plan where they're investing usually to be in something for a certain number of years and then exit at a nice gain. They're not used to insurance as much, where you can have a few great years and then you can have a few very tough years. And I think that's something that might have scared a lot of those companies. So they pulled their money, which has tightened our market pretty quickly. You go to the next slide, please. So how are companies adjusting to this? I mean, and you all on the line are probably dealing with this as well, but we have big logistical changes. We have companies that have everybody switching how they're producing or moving products. We have employees who are going to work remote that have worked in offices for a very long time. So there's slower response time to get things done. People are kind of trying to figure out working together in a new social distance environment. No more meetings in person. As you'll see from my picture there, actually one of my employees sent that to me. People are working from home, trying to balance, sometimes having kids there and handle things that require a lot of, mental capacity and attention, still doing their own workload. Increased use of technology, remote working, and then everybody's kind of learning how to handle things, client payments, all of that type of stuff. So that's how we as the general public, some of the ways we're having to adjust to this. But can we go to the next slide, please? And that's part of what we would say is unfortunately the new normal for now. And we'll have to see, where that goes. So this is the interesting thing about, what is this new normal? How is this going to work related to insurance? And before we really get into the heavy parts of insurance about it, how are the states responding in general? So California was one of the first states to come out and basically order insurers to make initial premium refunds for April and May, potentially longer. And there's potential that they're going to jump on the bandwagon of forcing insurance companies to find ways to pay for this. So there are a lot of people that are insurance experts in the industry that would say very confidently that insurance was not really designed for this type of situation, and that the government has been very clear in knowing about that. But it seems now the government is very much taking the approach, especially if you've read some of the comments from the president, very much taking the approach that they feel that the insurance companies should be the ones taking the major hit here. Um, we'll get into a little bit more of that in a few minutes on one of the future slides. But as you can see, so there are states right now, several states, New York, New Jersey, Massachusetts, Ohio, and Pennsylvania, that all have legislation proposed that would force business interruption coverage by defining the coronavirus COVID-19 as damage to the building. So a major trigger, just before we get into the major coverage aspects, when you're talking about building damage is the primary trigger for whether or not business interruption coverage kicks in. So the question is, if your facility had coronavirus, on a surface, or if it actually was a part of a structural affecting the building itself, there are people saying that maybe that could trigger the policy. There are the states like this saying that they are going to try to force insurance companies to pay under it, even though the policies are worded pretty clearly, and we'll get into some of the precedents that are set there from prior cases and legislation. If you could go to the next slide. So far in Florida, there really have not been a lot of legislative announcements or direction related to insurance to date. There are some informational memoranda that have been released. The first one says that first responders and healthcare workers that contract COVID-19 are eligible for workers' comp. And I point out there that they say eligible, not entitled. So there's still, I'm sure, going to be cases that will determine what basically defines eligibility there. So if somebody is sick, whether or not they got sick related to the job, this is specifically first responders and healthcare workers. If they got COVID from a family member and had nothing to do with the work, then obviously might not be covered under workers' compensation. But there's a lot of cases, I'm sure, where that's going to be very unclear where they picked up the virus. So I'm sure we'll see some interesting cases play out around that. The next one is they encourage all health insurers to broaden access to telehealth. So what they're doing is forcing the insurance companies that do health insurance in Florida to remove, they're not forcing them to remove the deductible, but they're forcing them to make telemedicine available to the members. So Blue Cross Blue Shield has done that, and they've also waived the deductible. So you can actually just go onto their chat and speak to a doctor if you have something else going on now and you don't want to go to a medical facility, if you have a sinus infection or other, typical type ongoing things. The next thing you'll notice there, though, is that outside of that, within the state, the Department of Business and Professional Regulation issued an emergency order giving condo and homeowners associations emergency powers, which would be similar to what they have during a hurricane, but also just allows them to step in and not necessarily have to run every single choice past the entire ownership. I think there probably will be some challenges there. There were associations that were shutting down pools and gyms and things like that before it was mandated by the state. There were a lot of upset unit owners. I think it's a very tough situation for those board members. I sympathize with what they're going through. They're having to make a lot of decisions to try to protect the health and safety of their own staff as well as unit owners. And there are some people that are not going to be happy about that. Next. So how are insurance companies currently responding? So since coverage is kind of unknown, and we'll get into the details of that, some of the things that they are doing right now to try to work with people is they're removing delivery exclusions. So if you're typically a restaurant that wasn't delivering, there are some companies that are removing delivery stuff. Even if you're not a restaurant, there are other entities like farms and other entities that are going direct to people because they can't move their product through the traditional channels. We actually have a client of ours that was a wine distributor that has actually converted now, and they're converting to move farm products directly to your house. So you can actually buy, it's called Buta Box now, BUTA. They're actually supplying fresh fruits and vegetables from farms directly to people's homes. So just an example where a typical client that had nothing to do with that product is now delivering, and typically that would be excluded under a normal policy unless they had that coverage specifically. Also, they have situations like at restaurants and others where you have employees that now might be driving their personal vehicle in order to deliver when they were waiting tables at the location before, and now they're switching to be delivery just to keep things going. So the companies are kind of adapting on that. I will say that a lot of companies that typically won't write vacant buildings are usually considered company. They don't like a vacant building because they don't know how often it's protected and whether people are checking in on it or using it in other ways. So a lot of them are suspending the vacancy clauses but that is an important thing to check on yours. If everybody has moved and gone remote for your organization, it's a very important thing to check to make sure that that you convert that. We actually have a couple of organizations that are nonprofits that were fully functioning and have gone to being completely closed, and we were actually able to reclassify and save them a lot of money by switching their current use to vacancy, and then the companies are allowing us to endorse and change it back to that once they reopen. They're also allowing payment extensions, pay it longer, go into additional installment plans, things like that. And then, as you've probably read, if you're keeping up on the national news, there's been a large announcements from many carriers like Chubb and State Farm, Allstate, others that are giving back a significant chunk of usually 20% or more of their auto premiums, since there's so many fewer people driving on the roads right now, and they can anticipate a massive reduction in losses. So important to note, though, that if your companies are saying that they're doing these things publicly, even if you read about them, it's important to get the endorsement on your policy to make sure that that applies to you. Next. So the current situation, the COVID situation, how it's affecting businesses, the American Property and Casualty Insurance Association is now estimating that the cost for small businesses right now taking a hit is between 255 and 431 billion per month. So we're about five or 6 weeks into this, and they're estimating that let's take the average there, 300 and something billion dollars a month is burning. That's the burn rate of however long this extends. Now, the government pushing insurance carriers to step in and pay that, although a lot of them have reserves, obviously, they typically bring in about all carriers in the U.S. $6 billion combined per month. So obviously, if this drags out, it would be a pretty short time frame for them to be impacted in a very bad way. Now, the next one points out that Chubb's CEO, Evan Greenberg, who is the son of the same Greenberg that used to run AIG, they claim that they would be bankrupted fairly quickly if they were forced to pay claims that their policies are specifically designed to exclude. And obviously, outside of the traditional property and casualty insurance, you have the entire healthcare industry, which is a whole nother animal. And they're saying separately that they think that their costs so far could be as high as 250 billion in addition to what they're normally dealing with. So next, please. So this is a quote from Bill Wilson, who's one of the nationally is kind of considered one of the people who has testified as an expert witness in many cases. He's somebody that comments and educates on insurance law and policy forms. And he basically says that courts tend to interpret ambiguous language more broadly in favor of the insured, of a client. But they interpret exclusions and limitations more narrowly. And obviously, if it's very clearly defined in the policy, then the courts are usually going to have to uphold it that way so that they're not setting precedents in many other situations. So just to put that in perspective, if the government steps in right now and starts telling insurance companies you have to pay on something that is is a portion or an area of the policy that is specifically excluded, I feel like there are a lot of companies and states that will end up, or even the federal government, that will end up in court for years over that being potentially not constitutional. There literally would be saying that the wording in your contract, because an insurance policy is a binding contract between the buying party, the insured, and the insurance company. So they would basically be saying that wording doesn't matter at this time. And that puts us in a tough situation because we all want to see businesses survive this. But I think it's going to force us to have to get creative to do that. If you go to the next slide, obviously that's some of the reasoning in why there is so much government funding coming out so quickly, because I think they are aware. So is there coverage for this is kind of the main point of this presentation. And as you'll see from the picture there are no easy answers to that. And I would actually caution to say that there are people taking a firm side one way or the other, that they think it absolutely is or absolutely is not covered. And I don't think we quite have those answers, but there are some things in here that give us reason to consider putting in a claim in certain times and not in others. So business interruption in the policy, also called business income, or Sarah referred to it as something else, business continuity, which can kind of be included in that concept. Civil authority, and then force majeure, which is a clause in a lot of policies, and then virus exclusion. So we're going to go into each of those specifically. Next, please. So business interruption. So just to give you an idea, basically what business interruption is and it's defined there with a lot more detail, obviously. It's to protect the net income and profit before income taxes of an organization from how they were normally operating to after something has occurred at their location. Now, typically this coverage is designed specifically to cover damage to the property. So it's something like a fire, a hurricane, etc. You have this coverage because if your building burns down and you need to relocate and you have the additional expenses, which would be extra expense, usually combined or within that same kind of area of the policy, you would need to relocate to operate somewhere else. Business interruption would give you the income to keep paying some of those bills that don't go away, as well as keep key staff. So for instance, if you're a restaurant and you need to keep your executive chef on, you might have to lay off some servers, but you want to keep some key management and other staff that would be critical in rebuilding the business after. You would have the funding coming in to do that. But it's important to note that there's some details there. A lot of people think it just refers to the revenue, but it's not. There's usually a 72-hour wait until that applies. And it's usually based on the average of the last three years of your revenue. So it's not typically just based on, what did I make the last couple of months? And then I just go to the insurance company and say, I want to keep making the same amount. Again, the second bullet there is triggered by damage to the building. So if there is coverage related to coronavirus that would trigger business interruption in a legitimate way, it would need to define damage to the building to include coronavirus. So that is where a lot of the lawyers that are coming out now saying that they want to fight and go after this, they would have to find a way to prove that there was physical damage that caused the closure of these businesses. I gave a link here. I think Sarah and the chamber will share this presentation. You can click on the link. There's basically it's a nice long study that goes through the details on what constitutes physical loss or damage to property. This is not something that can be treated as a flippant reinterpretation. There are years and years of case law, case studies on exactly how this plays out and what constitutes property damage. There have been many cases over things that have been detrimental to the operation of an organization that have not had an impact on the actual structure of a property and have not been covered in the past. So if they make a different determination now, they would be overturning many years worth of cases, which is why I think a lot of people don't suspect that will happen. But it's yet to be seen. And the government, as you know, the legislature can step in and kind of trump these things. It doesn't mean they won't get sued for doing it later, but it could happen. You go to the next slide. And the next one is talking about civil authority. So if the government steps in and says, hey, you need to close your businesses because of this health risk, there are clauses in the policy that specifically give you that coverage. So when it's in relationship to a hurricane and then you have structural damage and they've made you shut down or have curfews and all of those things, I've seen policies pay out for that. But civil authority usually is linked to the business interruption triggering effect. It usually has to be a direct physical damage to your property or a neighboring property within 1 mile that's restricting people from getting to your business. So even if it's found to be the case, triggered by business interruption and sometimes limited to as little as 4 weeks of coverage. Next slide. So the other two clauses that are being challenged quite a bit or brought up nationally from either law firms or insurance companies or experts are these two clauses, force majeure. So a lot of policies have a clause that's called a force majeure clause. And it basically, force majeure means that it's a provision that limits your own liability. If you have insurance to cover a specific operation, and then all of a sudden, due to unforeseeable events, though that couldn't happen, then things are delayed or completely eliminated from functioning, there's possibility that there could be some coverage there. Now, in most cases, you don't have a contractual, like for a restaurant, for example, using restaurants just because they're probably the ones that I've seen taking the hardest hit at the moment, but we can relay this to any business. You don't really have a contract with, people coming in and eating at your restaurants, things like that. So there has to have actually been a contract in force that expressly has a force majeure provision in it. If that's there and a business is not able to meet that obligation right now, some people are arguing that, the COVID-19 could be a reasonably unforeseeable event that could potentially trigger that clause. And then the next one is virus outbreak, which for some reason maybe hit the space bar again. The title didn't come in there, but there you go, virus exclusions. So what happened in insurance policy? So even after the other three clauses that we've talked about, if you were unsure still, like, hey, maybe that could trigger for me, this is the next one that's very important to check. So after the SARS virus outbreak in China in 2003, the insurance industry saw then and started working nationally and in conjunction with the state governments as well as probably federal government to implement a mandatory exclusion for viruses. So almost every policy has a very clear communicable disease, virus, bacteria exclusion in it that would cause any illness. They're worded a little bit differently. The standard ISO is the Insurance Service Office for America. They actually write the base policy form and then companies can endorse it from there. They have a specific virus exclusion that most companies have used and have put on policies that would basically say that that's clearly not covered. Next. So after I kind of share with you the doom and gloom that I have about the reasoning that insurance companies have to decline claims, I want to encourage that if you have had a financial impact or loss to your business, that you consider reporting it anyway. And I know that might sound kind of like, why would I do that? It could affect my long-term rates and things like that. And my answer is, typically things like hurricanes or acts of God or global type situations like this, insurance companies traditionally don't hold those against individual buyers as much. They might have an overall premium rate increase for a class of business or for all of their clients, but they typically won't target a certain client when it's something that was clearly out of their control in putting a claim in for it. So what's important to note, though, that because there's so much up in the air about what states are going to force people to do with insurance, the key is to have your claims submitted. Most policies require you to submit it in a timely manner. If you haven't submitted it within a certain time frame, they can deny coverage. So even if you submit it now and then they decline it, you still have submitted the claim in a timely manner. If later government changes things and says, you know what, now we're going to force them to pay for this, you've already submitted a claim, it can simply be reopened. But if you never submitted the claim in the first place, you might hit time constraints or time barriers where they can then use that to decline coverage. So again, because the state and federal government are clearly getting involved on some level in this, the president, last week came out with some pretty strong statements about how his feelings on the fact that he feels insurance companies should be paying this. And aside from all of the stuff we talked about in those coverages, force majeure, business interruption, virus exclusion, civil authority, there are endorsements in the policy that can sometimes apply to you and might step in now. For instance, there are some directors and officers policies or others that will occasionally have an endorsement in them with some sort of bell or whistle that company likes to use as an enticement. So for instance, I saw recently that a company had crisis management consulting up to $25,000, and you don't have to have another area of the policy triggering to access that money if your business needs crisis management. You just have to meet the definition in that policy that I read. You only had to meet the definition of the need for crisis management. So a lot of people could argue that there are things happening now that might trigger. So it'd be important to go through the policy in detail to see if there are those types of bells and whistles. Next. The other topic that's coming out now, it's a pretty big conversation. I actually think this may be the best way for our nation to deal with this in the long run. After 9/11, there was an act, the Terrorism Risk Insurance Act, came out that basically said that the way that it would work is insurance companies would insure terrorism, but only the first very small amount, and then everything would be reinsured by the federal government. So if another massive terrorist attack on the U.S. occurred, the government kind of knows that they would be on the hook for it. So there are a lot of people proposing, including the national insurance agents, so they call it the big IIA. They're all kind of recommending that the government consider this. It's kind of a backstop for pandemic insurance losses, and the federal government becomes that reinsurer. And it will work very similarly to terrorism. At least going forward, this would be in place. And now that the government has seen how much it costs them for this to not be there, my feeling on it is they should have either not allowed insurance companies to have these exclusions in the policy in the first place. Most insurance companies are filing their insurance policies through each state, and the states have not made them remove the virus exclusions and other things. So if they didn't like that it was there, they should have removed it when they go through that approval process. Now to do it in retrospect, I think would be very challenging. So this is one of the ways that they feel that in the future we could kind of protect the nation from this type of event. Next. Okay, some of the things that, now that we've talked about the actual coverages, some of the things that are important for you to think about in your businesses now that you have employees that might be scattered, working remotely, or the things that we talked about at the beginning of the presentation. So you should either consider these or at least maybe follow up with your insurance company on these. So how does your workers' compensation coverage apply? Now that you have employees that are not at your location, which is probably what is scheduled on your insurance policy, do you need to bring it to the company's attention that the remote, or will coverage automatically extend to them? Typically for workers' compensation coverage, your coverage only extends to those locations that are listed in Section 3A of the policy. So for instance, what that means is usually that's the state that's being listed. What's important right now is you might be a Florida company and you might have a couple people that early in the game traveled out of state and they're working remotely for you, and you might not even know they're out of state. If they get injured while working for you on their laptop at somebody else's house or a family member's house out of the state, you might not have any coverage for that. So make sure you kind of know where your people are and that your coverage is extending. So the next one is health insurance. And by the way, on workers' comp and health insurance, Obviously, if you have been forced to be in a situation of laying people off, make sure that you're communicating those revised payroll and compensation to both the health insurance and workers' compensation. If you have a decrease in headcount, it can reduce those premiums significantly. Now, obviously, the government stepped in with the PPP loan, which kind of converts to a grant type situation in order to hopefully not have as much of a headcount reductions. But as we've seen, they're maxing out on a lot of the money. So property coverage, as we talked about, is the building vacant? Any other things that have changed about how the operation is occurring now? Crime coverage, how is your money being transferred? Who's handling the money now that everybody's not in the same place at the location? And then last one, and thing that I think is probably one of the most important, is cyber liability. If you had cyber liability previously, that's great. If you didn't, it's definitely something you want to think about, because if you have people that are working remotely, and they're much more exposed, and therefore they're much more exposing your system. So that would be important to make sure that you're kind of looking at how are they set up at home, how is your system protected, what are the firewalls, maybe adding dual authentication for them to get into your system using a VPN. There's lots of, I'm not really a techie that way, but there are a lot of ways to better protect your system for people who are working on their home networks. And you can buy insurance for it, so consider it. And by the way, that's a relatively inexpensive insurance. And as of right now, cyber liability in our world over the last few years is becoming more and more important anyway, due to the fact that systems are getting hacked. Just the ransom component. Ransomware is huge at this point. People will come in, hack your system, shut it down, lock you out of your own system, and then hold you at ransom before they will release it. So change in coverage and underwriting. So what we're seeing now on renewals, we are seeing companies starting to tighten up their communicable disease and virus exclusions. Just in general, the market was already getting tighter before coronavirus happened. So we're still seeing that. And there's a huge question mark in the industry on whether the government is going to step in and force any changes or not. So again, not to be a Debbie Downer, but I want to bring up a few points to you about the, what else is around the corner. So we're so focused right now on everything happening with coronavirus. We're just over 40 days away from hurricane season. Unfortunately, the projections right now are that it's going to be a worse storm year than the past couple of years. We were fortunate to dodge a few over the last couple of years. So just keep that in mind. There are some concerns about FEMA being prepared. FEMA is stepping in some areas of the COVID-19 coronavirus situation. They're stepping in and basically they're saying they're prepared, but at the same time there are some very clear indications that they might not be quite as prepared as they're saying. So they're saying they're prepared, that they could still handle a hurricane if it hit while the coronavirus stuff is happening. So they're kind of looking at the dual hit to them. Can they handle a second hit while they're managing a lot of things related to coronavirus? They're bringing back and hiring a lot of retired FEMA people. So it indicates that they understand that they're already at staffing capacity, but at the same time, they are announcing that they think that they're fine. And then the review of your insurance coverages. It's probably not at the forefront of your mind right now. I understand that insurance isn't the sexiest topic in the world, but it is something that is very important to think about through this time, because it's it's going to be critical to make sure that your coverages are there. And as I said before, even if your policies have kind of those standard exclusions and appear likely not to cover this type of situation, there are many things that could be in there to afford you some protection. And in addition to that, things could be reinterpreted or changed either by the government or courts. And that's kind of my presentation. So I did kind of 42 minutes in presenting, and I figured I would leave a few minutes at the end. If anybody has any questions, we can delve into any of those areas in more detail. I know it's a lot of information in a short period of time. A lot of those obviously have a lot more detail behind them, but we can open it up, or you can feel free to put a question in the chat and we'll answer it. And Sophia, you can either raise your hand in the indicated area or type your question in there, and Sophia will relay it. Thank you, Michelle. I appreciate you jumping on. Again, if I can be of help, I mean, even if we're not your insurance agency, that's perfectly fine. I'm happy to answer any questions. In the chat group, I put the office number there where you can reach me if you have a follow-up question. I know that the chamber is going to email out a copy of this presentation just to give you kind of the bullet points. And I'm happy to answer anything else from there.
Just a reminder, we will be sending a follow-up email with Connor's information in case anything does come up later. We'll forward your information to him.
Absolutely.
All right, guys. Well, if nobody has any questions right now, you can feel free to ask Connor questions after you come off of the Zoom, because I know that happens a lot. Once you leave your meeting, you say, oh, I should have asked him this question and I totally forgot. It's okay. We're all here. We're all working virtually, so you can ask us any questions you have at any time. Thank you so much for your presentation. It's very informative. We greatly appreciate your time. It means a lot to us. Thank you so much for helping us keep our members informed.
Absolutely, guys.
Well done. Very informative. Thumbs up. Well, thank you all
I moved
for
pretty
attending.
fast, so hopefully we got everything in and talk to you guys soon.
Thank you.
Thank you.
Thank you all for attending today. Stay safe, stay healthy, and we will see you at the next Zoom. Bye.
Thanks, guys. Bye.